Welcome back. Today we're going to go over how to calculate a mortgage payment in Excel. Maybe you're a realtor trying to do some math for your clients, or maybe you're a first-time home buyer, or maybe you're a seasoned home buyer, wherever you're at in life. This should make your life just a little bit simpler. So before you hop in here, there's a little bit of research you probably need to do on your own. So I would try to figure out, how much house are you looking for? Not everyone needs a 5-bedroom, 3-bath house, right? But also not everybody can just live in a 2-bedroom, 1-bath house. Some people need more space or less space. I would try to figure out how much space you think you need, then look at houses in your area, and that's where I get your home price from. Down payment. Typically, people put down payments of 10 or 20%. It really just depends on really the loan and the institution that's giving you the money. I would call your bank and just see what they have to say first. Call a loan officer, one of the two. Loan amount. Again, that is a formula that I have outfitted, you can see here, and the reason that I put that in formula, so when you change things around, it'll automatically update for you. Interest rate, again, I would call your bank and see what they're offering you, or maybe a loan officer and see what kind of rate they can give you, and then I would put that in there. Or if you just have a good idea of what the market's like right now, then I would, just put in whatever you think's best. A good rough number for right now. Life of the loan in years. So I have for 15, but we're actually going to change that to 30. I'm getting ahead of myself. Because typically people get loan amounts in either 15 or 30-year increments. Most people get it in 30 years. So I would start out with 30. And then number of payments per year. There's 12 months in a year. You make 12 payments a year. So that's how that goes. You can make more than that, of course, but you're expected to make at least 12 a year. Total number of payments, again, 12 times 30 equals 360. And I have that in the formula again, so that when we change things around, it'll automatically update for us. But once you've done your homework and you know about how much house you would like to get, maybe not, might not know if you can afford it yet, but that's what you would like to have, then you can get into the nitty gritty here. But let's jump in. So what I'm going to do is do an equal sign and then PMT, and that is our payment formula. And I'm going to go over here to insert function so we can look at it. So we see we have 5 different lines here, and we're only going to need the top 3. These last 2, we don't need them for what we're doing today. Maybe we'll go over those in a different video, but for now we're just going to ignore these last 3. The rate. So what the rate is, that's just the interest rate per period of loan. So we have a 5% interest rate. We're going to put a slash here, and then we have it for 12. Mortgages again are monthly. There's 12 months in a year, so we're going to do this 12 here. NPR, that's total number of payments for the loan. And so I'm going to go over here and select 360. 12 times 30 is 360. That's how many payments there are in the loan. Simple enough. PV is present value. That is the loan amount. Not the home price. That is the loan amount. That is how much money you're bringing out that the bank is going to give you to pay for the house. Not what you're bringing. What the bank is bringing, which is going to be after the down payment, $240,000. So I'm going to click that and hit OK. And we see here that our payments per month is about $1,300. So not too bad. Not too bad for a house that size. But we're looking at it. Well, maybe we think, how much is that over 30 years? So I'm going to click that, and I'm going to do our little asterisk here, and I'm going to select 360, because you're going to make 360 of these payments. Hit enter, and we see that there is a whopping $463,000, or really $464,000 that you'll have paid by the time this loan has finished. Now, banks don't loan money for free. They have to make money so they can loan more money out. And they do that through interest. So that's how much money you're going to pay. So you might think, well, how much money in interest am I going to be paying? So I would do this, do an equal sign, click that, do a plus symbol, and this is actually a negative number. We know that because of the parentheses, and I'm going to add the loan amount. And so we see that over 30 years, we have paid $224,000 in interest. That is the extra money that we had to pay the bank for loaning us the money originally, which is a lot. That is a lot of money. I know. So I would definitely keep that in mind when you're going into this. Think about the money you're spending in the long term, and we can actually visualize that here. So when you pay a 15-year versus a 30-year mortgage, you're going to pay more up front with the 15-year, but you're going to save some money in the long term. And so what I'm going to do is I'm actually going to copy these, and I'm just going to plain text it in there. And so we're just going to look at how much money would we have saved had we gone with the 15 over the 30-year. So I'm just going to paste those in there, and I pasted them just the value so it doesn't change anything. Now this is a negative number, but that's okay. It's still $1,288 a month. And so that's the 30-year. So I'm going to go over here and I'm going to change 30 to 15. We're looking at a 15-year mortgage, and also rates tend to be a little better for the 15-year anyway. Just giving you a little heads up about that. But for our sake, we're going to keep it the same. Hit enter, and we see that, wow, that's a big difference. So the payments per month is $1,800. So it's about $600 more a month to do the 15-year over 30-year. Look how much money we're saving in interest, right? So I'm gonna go over here and I'm gonna add this, subtract this number, and they're both negative, so that's just gonna add them together. And we see that if we went with the 15-year over the 30-year loan, that we would have saved $122,000. Think what you can buy with $122,000. You could buy a Porsche. You could buy, maybe you can get you a good down payment on a house at the beach. You could buy a lot of stuff with $122,000, and that's the money you'd be saving if you went with the 15-year mortgage over the 30-year mortgage. And of course, I can go in here and clear this out, change everything. If I will say this, if you're going to go in here and change a lot of stuff, I would probably make 2 of these tables, just copy this and paste it down, and then I would compare the 2 side by side rather than doing it this way. But for our sake, just to show you how it works, I just did this quick little dirty method here. But yeah, so you have there's a lot of difference here. It really pays to know your numbers. So hopefully this will help you do that, and maybe I'll save you a lot of money. Who knows? But anyway, that's it for this video. If you have any questions about how to calculate payments or mortgages or anything Excel related, I would gladly answer those for you. Please do like and subscribe. It helps us out a lot, and we do read all your comments. So please do comment down below just to help us out, and we'll try to reply back to them, and maybe we'll make a video based on your comments. You never know. But that is it. Again, we hope you do like and subscribe, and we hope you have a great day. Thanks. We hope to see you soon. Bye.
Hey, thanks so much for watching our video. Now, before you go, how would you like to get free access to tons of Excel content that is designed to help make your life easier and your business better? Free Excel tutorials, Excel PDF guides, mini courses, and even a book I'm writing right now. Well, if you don't want to miss out on those opportunities, make sure you check out the description of this video. And if you enjoyed this video, don't forget to hit like, subscribe, and the notification icon so that you can stay up to date on all the stuff we're doing here on YouTube. Oh, and by the way, my name is Colton Coffin, and I am the founder and CEO here at Custom Excel Spreadsheets, where we help business owners and professionals get more done using tools that do exactly what they need. We help you get organized and automate tasks that save you time and money, and build collaborative tools that allow your team to perform and to engage at a higher level. And we also create some awesome visualizations that just bring your data to life and help it to tell a story that is meaningful and compelling. So I look forward to serving you with more content in the future, and I hope to see you again soon. Thanks.